Good morning and welcome to the BizNews Daybreak. I'm your host, Kerry Lanigan. Up first, our partners at Bloomberg get us up to date with the latest overnight news.
The U.S. and Iran are considering a 2-week extension of their ceasefire. We are told the aim is to allow more time to negotiate a peace deal. Now, the initial truce will expire next week. Today, White House Press Secretary Caroline Leavitt said the U.S. did not request an extension of the ceasefire.
You heard from the vice president directly and the president this week that these conversations are productive and ongoing, and that's where we are right now. I've also seen some reporting about the potentiality for in-person discussions again. Those discussions are being had, but nothing is official until you hear it from us here at the White House.
That is Press Secretary Caroline Leavitt. Meantime, Pakistan's army chief arrived in Tehran to help mediate as tensions over Hormuz seem to be intensifying. The equity market extended gains today, sending the S&P 500 and the Nasdaq 100 to record highs. This rally reflected hope of an extension of that ceasefire in the war with Iran. Today, the S&P was up 0.8%. The Nasdaq 100 gained 1.4%. Here is Brett Schutte, Chief Investment Officer at Northwestern Mutual Wealth Management.
It seems like over the past few weeks, investors have reverted back to the trade where they buy non-profitable tech stock or the Mag 7. That's what's pushing the market higher again. I suggest that if you think ahead, going ahead, and if the conflict does pull back, which I think a lot of traders are actually seeing, I would think there would be a broadening trade back out, and that's where I would position going forward, more so for that small and mid-cap trade to come back alive.
That is Brett Schutte of Northwestern Mutual Wealth Management speaking on Bloomberg Business Week Daily. Former U.S. Secretary of State John Kerry said the war in Iran probably could have been avoided. Speaking to Bloomberg, Kerry said the war was almost inevitable after President Trump pulled out of the Iran deal that Kerry helped broker during the Obama administration.
If President Trump came in and said, hey, I don't agree with this or that, they could have renegotiated. And we had moved the breakout time to more than a year. So you had this whole year where if we suspected, oh, they're doing something, we don't like it. And by the way, we didn't do trust but verify. We did don't trust but verify, which is why we had the most exhaustive inspection scheme you could possibly have.
That is former U.S. Secretary of State John Kerry speaking earlier to Bloomberg. The Trump administration reportedly wants automakers and other American manufacturers to play a larger role in weapons production. The Wall Street Journal reports the Pentagon is interested in enlisting companies and their personnel and factory capacity to increase production of munitions and other equipment as the wars in Ukraine and Iran deplete stockpiles. Defense officials framed it as a matter of national security. A series of suspiciously well-timed trades in the oil futures market has caught the attention of the Commodity Futures Trading Commission. More from Bloomberg's Amy Morris in Washington.
Investigators are looking into instances over a period of about 2 weeks where trading volumes surged just before major announcements and policy pivots by President Trump. That raised alarm bells about the potential misuse of non-public information tied to Trump's shifting stance on the war in Iran. The CFTC wants to see the data from the exchanges, including who was behind the trades. That investigation is now focused on trading of oil futures contracts on platforms belonging to CME Group and Intercontinental Exchange. In Washington, Amy Morris, Bloomberg Radio.
In business news, Ford Motors' top EV executive Doug Field is leaving the company as part of a sweeping reorganization. Back in 2021, Ford hired Field away from Apple in a move to convince investors Ford could compete with Tesla and other makers of EVs and technology. Here is Bloomberg's Craig Trudell.
To lose him now, not even 5 years later, just speaks to real change afoot at the company after taking their best swing at EVs and unfortunately coming up far short of where they hoped.
In local news, BizNews editor Alec Hogg applies second-level thinking to Roelf Meyer's appointment as special envoy to the U.S. and what it could mean for South Africa's strained relationship with America.
This appointment of Roelf Meyer tells us that for the first time, the United States, which has been going on a tirade against our country based on the echo chambers of right-wingers who are giving them information that suits their cause, not what suits the nation's cause. And by that, I mean, in the United States, there is this perception that whites are being attacked, especially white farmers are being attacked all the time, that there is a genocidal approach towards these people. And we know that it is very dangerous to be a white farmer. And we know that for political reasons, the ANC has been very slow in protecting these people. And we know that that needs to be addressed, of course. But that is not the reality of South Africa. Whites in South Africa are not being targeted and attacked and made to fear for their lives. There's all kinds of anti or racist legislation which needs to be addressed and indeed is being addressed, perhaps slowly, far too slowly for many of us. But the reality that exists on the ground in South Africa is easy to see when anyone visits this nation of ours. But now go back to Roelf Meyer. He'll be walking into rooms in Washington, and the immediate narrative from the Republicans, indeed, is going to be spiked. Their guns are spiked. Consider these optics. How on earth does the MAGA lobby maintain the narrative that the South African government is orchestrating a racial purge when Pretoria's envoy, the man who's sitting in the room, is a white Afrikaner? And a white Afrikaner chosen by the president himself. And not just any Afrikaner. The former Constitutional Affairs Minister of the National Party government that enforced apartheid from 1948 through until 1994. And the man who sat across the table from Cyril Ramaphosa at a time of great stress in our nation's history to negotiate a peaceful settlement. Just by being there, just through his presence, Roelf Meyer will disarm that hostility. He'll spike the guns, as I mentioned earlier, without speaking a single word. His physical presence will neutralize all those toxic talking points, all that jibber-jabber that has been keeping this antagonism alive, and lay the foundation for something better, for something fruitful, for something concrete that we can develop together. And as we well know, with the highest unemployment rate of any country that really measures it properly, South Africa desperately needs support, help, investment to get over the real issues that are inflicting so many in our country.
Staying on that story, U.S. intelligence analyst, retired Colonel Chris Wyatt, sat down with BizNews journalist Chris Steyn to dissect what Meyer's appointment could mean for SA-US relations.
My first reaction was, well, if you're trying to show Donald Trump that you are not against Afrikaners, this is an odd pick. Roelf Meyer is very much detested by much of the Afrikaner community in South Africa for his role in what has turned out, in my view, to be a party first, people last illiberal democracy that South Africa has today, where South Africans don't even get to vote for the people that represent them. I think most of the world doesn't even realize that. It's a system South Africa came up with, but he played a significant role in that after CODESA and the conference that he helped to get involved in. The other issue here is that some people find him suspicious or are skeptical of him because his relationship with Cyril Ramaphosa. But if I peel back the onion and I try to be objective about this, a little more objective than I was in my somewhat snarky analysis yesterday initially, this is probably an easy path for Ramaphosa to take. As Rumsfeld once said, known knowns and unknown unknowns. Roelf Meyer is a known to Cyril Ramaphosa. He's also 78. There are no political ambitions here. Assuming he accepts the post, he's going to be drugged out of semi-retirement to do this and go to Washington. He's astute enough not to step on his crank and make a huge mistake like Ibrahim Rasool did. So all things being equal, it probably makes a lot of sense for Cyril Ramaphosa to pick him. But I will tell you this, I don't think that Roelf Meyer is on the Christmas card list for many South Africans, including me. I'm not South African, but he's not on my Christmas list. So I think on balance, it's probably the move that made the most sense for Ramaphosa, but I would have gone with someone else. Of course, the problem with ambassadorships is, oftentimes you're put out to pasture, at least that's for the ANC. So if an ANC person was picked for that position, they probably think their career is done with. I suggest a few other people, someone who's been an ambassador before and someone who is with the Democratic Alliance that has the gravitas and the calmness and the understanding of the role. And it would probably actually foster relations. I suggested Tony Leon. It might be a good pick for this. But it is going to be Roelf Meyer, and some people are going to be bumhurt about that. But at the end of the day, I really don't think it matters all that much because I don't think the ANC is serious about improving relations with the United States. So I view the ambassador going to Washington to be a place marker, a bookmark, not someone there to go to actually affect change.
Moving to global investing news, Bloomberg's Charlotte Hughes Morgan takes a close look at ASML, a mainstay in the BizNews share portfolio, and what its latest numbers are saying about worldwide AI demand.
It's an interesting set of results. Obviously, a reminder that this is the first quarter of results where ASML is not reporting its quarterly bookings figure. Now, that used to be the most heavily scrutinized figure by the market. So, obviously, investors and the market are having to look at these set of results, and they'll really be looking at ASML's own guidance. And as we saw, full year guidance, ASML have raised it. It's now they now expect between 36 billion euros and 40 billion euros. They say that 2026 is a really strong year for us. I think the words were, it's panning out very nicely. What they see is their customers at TSMC, Samsung, Hynix, these companies are really ramping up their assembly capacity. And actually, the CEO is saying demand for AI chips is currently outstripping supply. So, we've seen already since the start of the year a huge increase in capex spending from these chip makers. And of course, ASML is the only company that makes these advanced lithography machines that can make the highly sophisticated chips needed to power the AI boom. So what we're seeing is, the demand for AI infrastructure, for data centers, that is still very strong. Obviously, ASML's share price was already up 40% since the start of the year. So there was an extraordinary amount of optimism already baked in. So that could be, part of the explanation why we're now seeing ASML called down this morning. It'll be interesting to see throughout the day, during the analyst calls, the questions that ASML get about whether they can ramp up their own capacity, and how far along are they in meeting this extraordinary demand, and will there be any bottlenecks? I think that's going to be a key question as we go throughout the day.
And still in global investing, Bloomberg Opinion's Andrea Falstead gives her take on the latest from Hermès, which took a big hit in the wake of Middle East disruptions, and what that tells us about the broader luxury sector.
The shares have really, fallen around 25% over the past year. They've really derated. They're on a forward earnings of about 33 times there. 5-year average is 48 times. You can see how much they've fallen back, because there's a real worry is other designer labels we've had this incredible reset of designers, lots of new creative directors. Hermès is still doing the same as it did. We've seen the resale values of the Birkin and Kelly bags actually moderate from the peak in 2022. That's sort of in line with the luxury boom and bust, and in line with the values of Rolex and other, highly traded, coveted assets. So there's questions about, is Hermès really as immune
as
and really untouchable, exactly as we thought, and this has fed into that, really.
Because and maybe that's the backstory in people's minds going into these numbers today, then, because you mentioned this a couple of days ago. There could finally be some competition.
Exactly.
Where do we look for that?
Well, where we look for it is Chanel, and obviously they're not listed, so it's quite difficult. But we've seen all the pictures of people, the frenzy for the bags. Dior, LVMH just said Dior was selling well. They're probably the two places that are the competition.
That's your BizNews Daybreak. I'm Kerry Lanigan. Thanks for listening.